Great guys, Les here from BG Trading, and today I'm going to show you how you can identify a possible market crash and how to avoid and protect your capital from what we call a correction or a market crash. Let's have a look. I just want to remind you, this is not a financial advice. Make sure you do your own research. It's just us sharing with you how we apply BG Trading, BGS20 strategies on a index and on stocks. Let's have a look now. We're gonna take all ordinaries. We're gonna be analyzing all ordinaries, which is all the Australian stocks, listed stocks, and the ASX code is XAO. Okay, we like doing that. Some people like analyzing the top 200, which the ASX code is XJO. So we like all ordinary, so we're going to keep it on that way. So now let's find, using our indicators, let's find some bearish intersections. Okay, so 13 month chart show us that we only had two bearish intersections since the last couple of days, which was in February last year when the market crashed. As you can see, the red circle in there, and also we had another bearish intersection. And when I'm talking now, I'm talking about bearish intersection level 1. For our members, VIP members, you know what bearish intersection level 1 is. It's basically a cross of the yellow line on the red line. So now another bearish intersection indicated here in September, and then we never had any other bearish intersection level 1 until a couple of days ago, and this is our red flag now. We don't know what's going to happen. Obviously, we had the US markets been falling last couple of days, and that is to do with the bond yield been spiking over the last 3 days, and obviously the threat of inflation in US. It might happen in Australia as well. We don't know yet. But the truth is, we have to be nimble. We have to act quickly to make sure we at least or reduce our exposure to a crash. That's what we need to do. Now, there's a few ways to also bet against the market, or actually to bet, pretty much a bet against the market. Let's say if you think the market's going to crash, you can look for a beta fund, which the ASX code is BBOs. It's a strong beta shares. It's a leverage fund that does reflect the opposite movement of the market. Okay, so basically, if the market goes up, actually, if the market falls 2% today, for example, BBOs most likely will go up 5% because it's a leverage position, short position. Now, if you don't want to leverage short position, you can also choose another beta share, which is the Bear. The Bear is Australian hedge fund as well, which does exactly the same. However, it's not a leverage, which means if the market goes down 1%, Bear gonna go up 1% as well, roughly, but it sort of reflects the opposite movement. So this is a good way to, let's say, would be like insurance for your portfolio. You can have maybe 10% diversify into that, especially when the market tops up at the highest levels, and therefore, if eventually there's a crash, which sooner or later we'll have, we can hold for a long term. But if eventually there's a crash on the market, so what happens is we can sell the beta shares and buy back on stocks for a cheaper price, which is a pretty good way to capitalize into a further units in each of the stocks that you're holding. So now, where it's gonna crash, nobody knows, but we know one thing: we are protected against a possible market crash. Okay, hope this video was valuable. If you like it, please hit the like button, subscribe our channel, and remember sharing with someone that you might believe will be adding value to. In addition to that, I just want to remind you that we have a Facebook group. I'm going to put the details on the description below. Facebook group, we got a lot of great content, great analysis, and I hope that will help you as well to make your own decisions on the market. All right, so that was today's video. Hope that was valuable, and good luck, everyone. Have a great day.